What is going on, guys? It's Squire Trades here. The date is currently September 8th at 4:25 p.m. Eastern Standard Time. And this is the next installment of Journaling All My Trades. So, just briefly, we'll go cover this 3-month chart, quarterly chart. I mean, you don't have to ask a lot of questions here. You see this quarterly bullish engulfing from January, February, and March, and then you see we are once again creating a bullish quarter. Dig down to the monthly, you're going to see a similar story. Had this sharp retrace, swept sellers out, buy stops, inverse this fair value gap here in May. June continued, July continued, August continued, but it was a pretty poor continuation. And now we're in September, looking to go and take out this previous monthly high. Dig down to the week. What do you see? Well, what I see is we swept this liquidity, and in doing so, then engulfed last week. So coming into this week, very, very, very simply, we're looking for previous week's high. We'll mark that previous week high. And we are looking for previous month high. You can see up here in this top corner, no news Monday, no news Tuesday. Wednesday we have PPI, Thursday we have CPI, and Friday we have news at 10 a.m. as well. Dig down to this daily chart. What do you see? I was looking to attack. This is also previous daily high and previous weekly high. You can see with the benefit of hindsight currently that we didn't end up getting all the way there today. We'll talk about that in a second. 8-hour chart, what are we in? I mean, you can see again, we sweep this sell side liquidity. We've got our market structure shift here, bullish engulfing fair value gap. We're making higher highs, higher lows. We're going to continue to make higher highs, right? Don't ask a lot of questions. Keep it simple. Once again, bullish market structure, boom, bullish, bullish, bullish. Everything about this just bullish, right? 1 hour, again, we don't have to ask that many questions. This candle at 8 did what? Comes down, sweeps this low, sweeps this low. You know, this is still higher high, higher low, higher high, higher low, higher high. And this is still potential. This is still higher highs and higher lows. There's no bearish market structure shift here yet. So let's talk about what I saw coming into this morning. You had Asia range created last night between, that would be 8 and midnight. You'll see London ended up sweeping Asia lows, but London also kind of just consolidated as well. At 9:30 open, we manipulated a low and displaced, creating a 15-minute bullish engulfing candle. And at this point, I was already looking long with my draw on liquidity being previous daily high, previous weekly high. And that doesn't end up getting delivered. But that was the bias. I was looking to get long. I was kind of hoping this candle here at 9:30 would do the opposite of what it did. I mean, if you draw every sell side liquidity that we have here at the bottom, you've got 1, 2, what is this? There's 1 here, 3, and 4 stacked lows all in a row. I was kind of hoping that this candle would come and open, would manipulate, sweep all of this sell side liquidity, respect these fair value gaps, and then I could find myself some kind of continuation, right? So if I replay this, get rid of these candles, I can kind of draw you out what I would have been looking for. I wanted to open to just slam and then kind of build me some new structure to trade out of, and I wanted to catch this side of the curve here. Let it generate, reverse, and catch this fair value gap retrace, right? This is what I would have been looking to see. And that didn't end up delivering, but I'll show you what I did catch. I'll take this out of replay. Here's your 15-minute. This is what I saw. So I drew a range from here to here, from bottom to top, of what we could see in the moment, right? So I couldn't see any of this BS in the moment. I could even take this back a candle further as well. This is all I saw. 9:30 opened, displaced, We're in bullish market structure. We're retracing back into discount of this most recent price leg. So I'm just very simply thinking, all right, I need to find a way to get long. So when I dip down into this 1 minute chart, what are you going to see? What did I see that said, hey, now is the time to get long? All right. What I saw, draw out the range, you see it, and then let me kind of draw it over here so it's more clear for the viewer. High to low. You see we come down into discount. Let me click back to this 15, draw out this 15-minute fair value gap. And very simply, all you would be looking for is just some kind of execution model out of this 15-minute area of interest. You retrace back into discount here, and you sweep this sell side liquidity, you sweep this sell side liquidity, right? You run stops, manipulate. Now I'm looking for long, back up to buy side liquidity. So where's your buy side liquidity? Well, you have this level, and then you also have this level here. And not only do you have those two levels, you also have what we drew out earlier. You have the previous daily high, you have the previous weekly high. You can kind of call it whatever you want to call it. But you can see that we have it above us, right? So what I ended up taking, again, I couldn't see all this in the moment. I couldn't even see that in the moment either. All I could see after retracing back into my discount fair value gap, all I could see was this bearish fair value gap. There's no market structure shift close by, nothing. So what did we do? I waited for closure, right? This is important. If you don't know how inverse fair value gaps work, write this down. This is important. I waited for the body of the candle to close above the bearish fair value gap, right? I'll say it again. The body of the candle has to close above the bearish fair value gap. Same thing is true for the opposite, right? I would wait for the body of a bearish candle to close below the bullish fair value gap, right? So if I have a bullish fair value gap right here between this wick and this wick, this body does not close below this fair value gap, right? Not even the wick. But this body, it closes below, right? So that's kind of what you want to see for your confirmation. I saw it here, inside of discount, inside of my 15-minute PD array, and I did not ask any questions, and I got long. Stop at this candle's low. Actually, I ended up getting a little bit of a worse fill because this was about a 20-point stop. There we go. This is what I was looking at, and all I wanted was up to these highs. Either one. And, I mean, you'll kind of see how this played out. Straight to my TP, all done. That was the trade I took today. I think it was arguably the best opportunity presented. If we zoom out here for a second and let this, actually, if we just get out of bar replay mode and you see the rest of the price action that played out, you'll see that in this candle's wick, when we manipulated down in the discount into this fair value gap, I managed to, in one candle and at the open of the next candle, the trade took exactly 8 minutes and 29 seconds. I can't pull that data up right now, but maybe in a different video. It took exactly 8 minutes and 29 seconds to go from entry to TP, right? And you can even count these candles if you want. I got in on this one here, so it would be 1, 2, 3, 4, 5, 6, 7, 8. 8 candles. Delivered to external, all done. That's it. Very simple, very repeatable. Wait for discount, wait for your PD array to get hit, take an execution model out of it. Be willing to lose the first one. Here's an important point for you, right? The market's not always going to go into your PD array and respect it the first time around. You have to understand that sometimes it's going to want to hang around in that fair value gap and kind of consolidate on a lower time frame before we make the move, right? So this 15-minute candle here could have closed bearish, and we could have actually swept the previous 15-minute low and then received this candle. There's nothing that says the very first 15-minute candle that retraces into this fair value gap has to be the one that delivers this price action here, right? It could have consolidated right here in this range, came down, swept me out once, and I still would have been willing to pull out of this same 15-minute fair value gap. The only difference is I would have taken a small loss and then just been willing to get back in the second time. And I'm generally willing to do that maybe 2 or 3 times, but that's kind of where my limit is. After 2 losses, I start to wonder if are we in the right conditions? Is this a good day to trade? Is the market going to move to my target? Those are the things you have to be asking yourself in the moment. So I got lucky. I didn't get lucky. I followed the process. I did all of my normal things, did what I had to do. I patiently waited, right? I get to the charts at 8:30 in the morning, typically, sometimes earlier over here, 8 o'clock, 7:30. And I had to sit through all this choppy price action. I had to sit through this entire move, miss the first run on open, and just be patient, right? Let the market retrace. Let the market give you an opportunity. Don't try to make something out of nothing. Just be patient. Let it come to you. It will stare you in the face and scream, take this trade. You'll know when it's the right one. Be patient. Trade your setup. Know your setup. Plan your work your plan. Same old, same old. And that's all I have for today. That's today's trade. That's today's journaling. That's today's markup. No news tomorrow. I'll be pretty risk off tomorrow, same way I was today. And we've got big news coming later this week. Stay patient. Work your setup. We'll see you next time. It's been Squire Trades. Till next time.